This is not a gold market that's being propelled by the West. It's China. Back in the middle of 2022, the Chinese central bank started buying gold like hand over fist. Chinese retail also really important. I mean, search online for gold beans, millennial investors in China, like spending $20, $30 a day buying gold that's in little coffee bean shaped things because they're saying, oh, you can't lose money owning gold. That's obviously a very, very large population that's sort of remembering gold as an investment vehicle.
The factors driving the gold price are really different this time around. What does that mean? We'll talk about the outlook for gold, what has been driving the gold price up, and updates to West Red Lake Gold, a really interesting project based in Ontario, with our next guest, Gwen Preston, VP of Investor Relations at West Red Lake Gold, previously at Resource Maven. Welcome to the show.
Thanks so much for having me.
Yeah, you made a great career pivot. People in the space know you well, so we'll talk about that further down in the interview. Let's talk about gold first. An interesting presentation you made at the Metals Investment Forum not too long ago, where you described in detail all the forces that used to be driving the gold price up have kind of, not been doing that. We're looking at other factors, including Chinese demand, which we'll get into, central bank buying. But let's talk about the macro variables first. Gold has traditionally been seen as an inflation hedge, but like you pointed out in this presentation, the TIPS yield ETF, for example, has been breaking down its correlation with the gold price. What's going on there?
So I think this is a really interesting story because, I mean, for decades, gold, when it was rising, was always driven by the same forces. And it was driven by those ones that you mentioned. Inflation was really important. Uncertainty, whether economic or geopolitical, or maybe both. And then that put those together to some extent, and real rates. That's why there was such a strong inverse correlation between real interest rates and the price of gold. When real rates were going down, the price of gold was going up. That was like, they were like best friends. But that correlation broke down. Like 2 years ago, the lines started diverging, and not just a little, they didn't just like separate a little bit. They went in entirely different directions. And looking back, I'd say there's like been a 2-year period where people have been like, well, that's interesting. What's going on there? And it's really hard for all of us who have been so reliant on a particular thesis for why something happens, and a very reliable thesis, to move away from that. So there's lots of conversation out there about like, well, is it because people think that inflation is going to turn down, and people think the economy is going to break, and so interest rates will have to come down, and they're forward looking to that. So that's why gold is going, even though rates are still strong. So there was sort of a lot of sort of filling in the gap, but the gap just kept getting bigger, and the fill didn't do it. And finally, I think it took a while, but finally focus. And I say this about myself as well as a gold analyst. It took me a long time to realize what was going on. It's China. Back in the middle of 2022, the Chinese central bank started buying gold like hand over fist. And granted, that data was not public, really. We didn't see that until more recently. Some of it was the Chinese central bank started disclosing it. And then others, like there's been a few analysts who are really knowledgeable about China and have sources inside China who have been able to validate and then even amplify the numbers that are coming out of the Chinese central bank gold buying. So they've been buying so much gold. It's unbelievable. And then it's not just the Chinese central bank. It's not just the People's Bank of China. It's also Chinese retail. And this, I think, is a part of the story that really got missed until recently. If you go back, there was 20 years of dramatic growth in China, which created all kinds of places where money could grow reasonably safely, right? They didn't have to, they were in the really manic growth phase. And so there were lots of places to put money to take advantage of that. There's a paradigm shift, right? No phase of manic growth lasts forever. So that phase is over. And now, instead of real estate or interest rates, the stock market, those are not providing the returns that they did. So now the Chinese money needs somewhere reliable, safe, and with upside to live. And, they're turning to the most classic answer to that question that ever was, which is gold. And the gold trading on the Shanghai Exchange has just exploded in the last 6 months. It's just unbelievable, the difference there. So that's the story now. It's being driven by China, and it's creating a really interesting setup in the gold space because Western investors are the ones who buy gold stocks. They're used to buying gold stocks when Western investors are the one lifting the gold price. It's all sort of part of the same conversation. They're buying gold stocks. It's all happening together. This time, the gold price move is almost happening as a bit of a surprise to the Western investor because those reasons aren't in play. The reasons that they've long looked for aren't really in play. So the gold price doing incredibly well. Gold equities, not so much yet. I think that's going to change, and I have a few theories about when and why, but that's the setup. And I think what's really important is that those forces that are propelling all of that Chinese gold buying, those are very real and here to stay, right? Deglobalization, de-dollarization, paradigm shift in the Chinese economy. I think that those are really powerful forces.
Are they here to stay, though? That's my next question. We'll talk about gold mining stocks in just a minute. But yes, the Western investor has been perplexed by this because Western capital has not been flowing into gold ETFs and gold physical. If you look at ETF data from the World Gold Council, it's been a net outflow from North American investors, but a net inflow from Asian investors. In fact, China was up 68% investment demand over the last year. So you're absolutely right there. I wonder if this is a one and done. The Chinese investors, for the reasons you mentioned, bought a lot of gold. Now they're done. Now they have gold stashed up. Is this a long-term trend, though? Will it reverse now that, the Chinese investors have had their fill of buying gold?
I guess we'll have to find out. I mean, there certainly has been a bit of a pause, at
Right.
least in the official statements from the People's Bank of China. I am I am open to the possibility that they are also going to game the market a little bit if they still want to continue buying gold. There would be nothing that would stop the People's Bank of China from saying, "Oh yeah, we're done buying," and then see the price come off a bit and then jump back in to get more. Those things are possible. I mean, could it be done? It could. What I think is an interesting coincidence is that now we're probably getting to the point where we're going to start getting some of the more classic gold forces in play in the West. And so has this just been the first part of the move? And now we're going to get the traditional real rate type environment forces propelling gold from here. I mean, I think that there's a couple irons in the fire. I don't know which ones are going to continue burning or burn the brightest, but I like the fact that there's a bunch of them in there.
It's not just China, though. A lot of Eastern central banks, Eastern European central banks have been adding to the gold reserves over the last couple of years. There's this trend of repatriation of gold as well. So India just repatriated, I think, 100 tons of gold from its UK reserves back to India. What's underpinning this larger trend, do you think?
I mean, what I love about this is that for a long time, deglobalization and de-dollarization were very nebulous concepts, right? There was evidence to support them as concepts, but they weren't realities. They weren't part of the day to day. But since COVID, showed all of the risk that is in a global supply chain, and then right afterwards, Russia's invasion of Ukraine really drew a line down a globalized system that was already showing those fractures. Now, deglobalization and de-dollarization are like real forces. They're in our faces. We see them sort of in everything that we're doing. So that's why the central banks are buying gold. How much will they buy? How long will they continue buying? As to your question about China, I don't know the answer to that, but I do know that major change requires banks, countries, individuals to have that safety net, that stockpile that makes them feel like they can handle whatever comes. And that's always been gold's role. And I think it's showing that in spades of late. And I think that's going to continue for a while.
Gwen, I think the most interesting correlation breakdown for me, at least, has been the dollar versus gold, the US dollar, that is. Historically, they've held a very close inverse relationship. That's broken down this year, especially in the second quarter. Since March, we're seeing a near perfect positive correlation. They've been moving perfectly in tandem with each other, which historically has not been the case. And it's interesting because up until this point, gold has been marketed, at least, as sort of this anti-dollar asset, this hedge against fiat currencies. Is that narrative starting to change, do you think?
Yeah, it's all part of the same melee, isn't it? I mean, the US dollar was always, this is part of de-dollarization, right? The US dollar was always the kingpin, and whenever it was weakening, then there was shifts to alternative safety nets, call it that. And I mean, that's what the real rate relationship was all about as well, was really about that relationship to the dollar. They're two sides of the same coin for sure. But these are the things that are all fracturing. And I mean, I don't think the dollar is not going away as the world's reserve currency anytime particularly soon, but we are increasingly seeing countries, sign bilateral agreements for all kinds of things, including commodities that are priced not in US dollars. And that's a ball that's got momentum. That's going to carry on. And so, does every country backstop those deals with gold? Absolutely not. But gold is there needs to be a backstop for a country. And if, China's, the great example, they are slowly but surely reducing their exposure to the US dollar as their backstop, and they're replacing it with gold. It takes a long time because these backstops are massive, massive things. But those are the processes that are underway. And same with, the repatriation. They want to know that they have their gold, where it is, when it is, and what it's worth.
Okay, so I mean, as you know, correlation doesn't equal causation. What I want to know is what's causing this positive correlation between gold and the dollar. Is the gold now following the DXY, or is it just a coincidence they're moving together because it's being pushed up by everything else we talked about so far and perhaps other things?
Yeah, so I think that's a good question. I don't think that there is a lot of causation here. I think the answer is that they are coincident, not causal. I think they happen to be moving up at the same time. I mean, we're in this really interesting phase for gold to be rising as strongly as it is in a stock market that keeps rising, but yet, and inflation is coming down. There's a lot of unusual forces. I think it is absolutely just a coincidence. Yeah, which
Okay.
is yeah, which is novel.
Gold has historically been seen as also a hedge against equity volatility. And you mentioned the stock markets. Well, the equity markets have been nothing but up. So there's not a lot of volatility there, Gwen. So on that note, are you seeing the gold's role as an equity hedge kind of shifting as well?
I think what I'm seeing is gold equities as part of the hedge not getting their time. So I think that I think, there's a few things going on here. I think the gold price is moving not because of Western investors, and they are the ones who would conventionally also buy gold equities. Is gold being used as a hedge by Western investors in general? I don't think that that's a very significant factor at this point. Like you say, gold holdings in gold-backed ETFs are declining. They continue to decline. So that whole playbook isn't on the field right now. The whole gold as a hedge thing. There's obviously, for years now, there's been people saying that the bubble is going to pop and the market isn't going to last, but that's not what we're seeing. That's not the life that
Sure.
we're living right now. And so I don't think there is a lot of like gold hedging going on in the West.
That's right.
Yeah.
That's a very important narrative you bring up because a lot of people have been telling me, well, I've been hearing from some people that, look, gold's going up because the gold market is predicting some sort of economic calamity or recession. But like you've just broken down, it's really the Asian investors buying it up because of Asian economic reasons, not because presumably the Chinese investors are predicting a recession in the US. That's not what's going on, right?
That is
The US investors aren't piling into gold.
That's exactly what it is. These are happening independently for their own reasons. And the fact that we're so used to talking about gold related to what's going on with the US economy means that we keep trying to draw lines. But I just don't think that those lines exist. I mean, you can draw lines, but that doesn't mean that they're causal, like we say. So I think there are two separate things that are going on. The US, the Western side of the equation will play out the way that it does. If there's some sort of recession or whatever, gold will benefit from that. If there isn't, and if there's a general commodities bull market, gold will participate in that. There's lots of reasons why, or if gold just remains strongly priced the way that it is, and this is one of my theories about when gold equities might get to have a little bit more fun, is that we haven't yet had a quarter. We're just about to finish a quarter where gold companies are selling gold at $2,300 an ounce or more. That's a lot. That's a very strong price. The first quarter, the gold price only moved up to that level for the last month. So they only had 1 month instead of 3 months. I think that when quarterly financials come out for the second quarter in whatever it is, like the end of July, I think a lot of the algorithms that crawl through the internet looking for, profit yields and things like that will have to notice gold stocks because the profits will be very impressive. This is a very short time frame. Inflation has been going down, not up. A lot of the inflationary pressures at mines have already been accounted for. In fact, I was just today looking at a Canaccord chart about how inflationary pressures at mines are way down this year relative to last year. So costs should not be up, but they're suddenly able to sell gold for $200 more per ounce than they did. So I think the profits are going to be very impressive. And I think that might be the thing that triggers Western investors to be like, oh, wait, there's all kinds of money being made in this tiny sector that we love to play when it stands up and says it's my turn, which is kind of what gold does, right? It's not always in play for the Western investor, but when it stands up and says, hey, things are working over here right now, then Western investors are like, oh, right, it's time to do that again. So that's a theory that I have that hopefully will start playing out in a month or so when those second quarter financials come out.
Yeah, I'll come back to gold equities, but finishing off on gold itself. So looking forward then, Gwen, the underpinning forces that you're looking out for that will drive the gold price either up or down or maintain its current level, what are they?
It's continued buying in China. I think that is the most important thing right now. The central bank, big player. Chinese retail, also really important. I mean, search online for gold beans, right? The number of there's articles in the last months about, like millennial investors in China, like spending $20, $30 a day buying gold that's in little coffee bean shaped things because they're saying, oh, you can't lose money owning gold. That sense that that's obviously a very, very large population that's sort of remembering gold as an investment vehicle. So that is really the most important thing. And we shall see.
And I'm guessing you still think that that particular demand from that segment is going to be strong because you told me offline you're still relatively bullish in gold.
Yes, I do. I mean, I don't think you go from massive interest to zero interest overnight. I don't think that a freighter turns around that quickly in the ocean. I just think that the People's Bank of China can turn its buying on and off on a whim because that's just something that a central bank can do. I don't think that they too would have gone from like buying oodles to buying none. So I think that this thing is still in play, and that central bank, that huge reserve that they're transitioning from the US dollar to gold, there's still a lot of work to do on that front. So yeah, I think that demand is going to stay strong.
Okay, let's talk about gold miners then. Are we seeing more M&A pick up right now as we speak? June, middle of June?
Yeah, I mean, it's not dramatic, it's not huge, but like there's
That was a rhetorical question. Let me reframe that question. Why hasn't it picked up dramatically at $2,300?
that's perhaps a better question.
Yeah.
I mean, it's a good question, right? I wish I had exactly the answer to that. I guess, yeah, I don't know. I don't actually know what the answer
Well,
is.
so on there's two sides of this story. So on the one hand, like you're right, the producers are doing well. They have more cash, presumably.
Mhm.
They now could go on a shopping spree. But on the other hand, if you were at the helm of a Barrick or Newmont, would you want to buy juniors at record high valuations?
Yeah, and I mean, they're not that expensive. Sort of the gold equity interest flood hasn't really happened, and that's often, I mean, majors are often quite reactionary when they go on their shopping sprees, right? They see those share prices rising, they see the scramble getting underway. We're certainly not in any kind of scramble environment. So there's a lot of tire kicking going on. I know that there's a lot of tire kicking going on, but I think there's just nobody feels the pressure to get the deals done right now.
I've been told there was a scramble environment in 2011, and I know you were in the industry at the time. What mistakes were made back then?
Oh, so many. I mean, the big mantra back in 2011 was bigger for the sake of bigger, right? So just produce more. The missing it part of that statement was, and also make money. That
Right.
was what the majors really forgot back in the second phase of the last gold bull market. They really forgot that the goal is profitability, not ounces. And so there were all kinds of very expensive purchases made for assets that would give them real scale. But then there were all kinds of cost overruns and labor problems and all the things that are part of building mines. When you go big, 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 then those problems also get really big. And like I say, profitability was really forgotten in that scramble. So management teams are also very different than they were then. That the mistakes that were made in 2011 and in the last bull market mean that a lot of the management that was in play, the C-suite that was in play back then is out and there's new management in. And for years, as we know, they've been driven by, certainly through the bear market, they were driven by dividends and profitability and whatnot, and not by scale. So that mentality is absolutely still in play. And it's certainly one of the reasons that's keeping the M&A action quiet.
One of the most common questions I've been asked myself is what is the point in buying a gold miner right now? If you take a look at the GDX, like you've mentioned before, it's underperformed gold on a 10-year basis, right? The gold price has surpassed all-time highs at GDX. It's about 50% of its 2011 high. And so if you think about the idea of buying a gold miner as just a leverage to the underlying metal, well, that leverage didn't really exist for the most part for the better half of the last decade. So going back to my question, what is the thesis for investing in gold miners? What is the point?
No, it's an absolutely good question. And if we were in the conventional kind of gold market. I think that the GDX and the GDXJ would have really lifted a lot more at this point in the gold price ascent than they have. And I think that is a very stark and unfortunate example of the fact that this is not a Western this is not a gold market that's being propelled by the West. The West is not really participating. They're the ones that buy gold stocks. The Asian investor is not buying gold stocks, they're buying gold. It's a very different purpose or
Well,
goal that's
I
out
think
there.
you've just answered the question. We have to start marketing in China. That's
There we
funny.
go. Yes, let's explain leverage in gold mining stocks. Yeah, that's
To the
probably,
Chinese investors. Okay,
yeah.
the Western investors haven't taken it part yet. So what's the pitch here? How do we convince the mainstream investors who have been, I guess, absorbed with Nvidia and AI and big tech into the gold miners that if you just look at it from a free cash flow basis are doing really well right now?
So I think the paradigm shift that I was talking about in China is probably as much of is absolutely part of the pitch. So that paradigm shift was about rampant opportunity, to grow money, shifting into a more consistent phase of growth. And then, what do you do with your money in that? Are there risks in the US stock market right now? Of course, there always are. Is Nvidia worth $3 trillion? I don't have an answer to that. But there's a lot of people who have made a huge amount of money in this tech market over the last 5 years. Does much of that money need to start searching for a little bit more security, a little diversity, a little hedge, for it to make a massive impact in the gold space, which is so much smaller? No, it takes like a few percent of the amount of money. And what I think is interesting is going to conferences over the last little while, I actually physically see that money present. I see younger investors, people our age, who are showing up and they're literally saying, I've made a lot of money in tech and I need to figure out some other places to put it. So I think that's one force. And it's a little bit parallel too. I mean, the Chinese investor is being forced to pivot because those growth opportunities shrank to nothing. This is more of a choice to pivot. But then you can layer on top of that, rate cut near the end of the year. We're starting to see, inflation looks like it's coming down the way it's supposed to. Unemployment is creeping up. If you start to look at historic trends for what those crossing patterns mean, rate cuts are likely. Does that trigger that historic mentality, that reliable mentality? Rate cuts mean gold, right? I should buy gold. I don't think it takes a lot of these layers to pile on top of each other and start to create some investor interest in equities on this side. And that, then you come, as long as that happens, then the gold miners will outperform the gold price significantly.
Do you think these net asset value I guess increases because of the gold price have been reflected in the market yet?
No, I don't. No. And that's part of my thesis for why these second quarter financials will hopefully have some impact in the market, because I really don't think that people are paying that much attention to gold. I don't think that they're calculating those net asset value impacts. I don't think it's manifested. No.
What are the juniors doing right now with this kind of gold price? Are the juniors more or less price agnostic because they have to drill regardless?
Yeah. I was going
Yeah.
to say they're wishing that it had some benefit for them. That's what they're
Okay,
doing.
yeah.
I mean, it's for real, right? Like, if we can't even get investors to care about, Agnico Eagle and major gold mining stocks and, the profitability that they're having with gold at these levels, well, the juniors are still tapping the same pool of sort of gold focused investors that they've been trying to get money from for a long time. So unfortunately for the juniors, they're not really benefiting much yet. There's some, a tiny bit more investor interest can make a significant difference, but the juniors are still waiting for their opportunity.
What's the seniors more or less broader expansion plan for the most part? Are they drilling right now themselves, or are they buying companies? Because like we just talked about, there hasn't been a lot of buying this year so far.
Yeah, I think there's a little bit dabbling is maybe too soft a word for it, but there's a variety of soft step approaches, like signed joint ventures, partnership deals, using, a fund manager to try and allocate a $20 million fund into juniors to sort of get a toehold in there. There's a lot of dabbling because that pressure isn't on. They don't feel the need to buy. There absolutely is more. There has been in the last 5 or 6 years, majors have increased the amount of exploration drilling that they're doing on their own for sure. And I think, again, that's part of the learning from the last bull market where they stopped doing any of that early stage work themselves and ended up having to pay big amounts for it because the market got away from them. So there is more majors doing it themselves, but there's also some new kinds of partnerships going on in the space, and maybe it isn't full acquisition, so it doesn't seem as
Yeah.
headline worthy, but it is happening on a quiet level.
Well, let's take West Red Lake Gold as an example of a company that is operating in today's environment, and let's just take what they're doing right now as perhaps an example of what what we can expect from the sector. I've spoken to CEO Shane Williams several times. People can check out our prior interviews in the links down below. He gave a history of the mine. Great backers, Frank Juicer is involved, for example. But let's talk about what's up next. Just today on the 17th, it was released that, or announced that the company has a goal to restart the high grade Matson Gold Project or gold mine in the second half of 2025. Okay, so tell us about that timeline, Gwen.
Yeah, so I mean, we acquired this Madsen gold mine about a year ago. The deal closed in June of 2023. So the first year on the ground was all about making sure we knew exactly what we were doing there, what worked, what didn't work, what needed to be done, and getting going on that. And integral to that was drilling. So we needed to get underground and start definition drilling. There was an insufficient amount of definition drilling that went on. The prior operator really lost control of the ore. That was one of the big problems. They didn't know exactly where it was. So lots of definition drilling underway. That's been consistent since October of last year and will carry through forever. To be honest, you never stop definition drilling. You just keep making sure that you know where the mineralization is. But then a lot of the other things about, okay, what didn't work last time and what are the fixes? That analysis has been done. The fixes have been identified. The suppliers of those fixes, if it's things that we're buying, are like being lined up. And the next 6 months in particular is all about putting those fixes in place. So driving the connection drift that connects the two sides of the underground mine, installing a primary crusher, installing evaporators so we have more water management capacity, building a camp so that we can house people instead of trying to rent houses scattered around the entire town of Red Lake. There's a lot of significant infrastructure projects. I mean, they're significant, but they're not. The connection drift is a $10 million project, so that's quite big. The camp is $5 million. The primary crusher is sort of $1.5 million. They're big, but not big. They also just take some time, and you got to get them done because they are major de-risking steps. And if we can get them all done, then, and as we do that, we're going to start test mining. We're going to make sure we know which mining methods to use. We're going to start stockpiling mineralized material so that we can really achieve this timeline. We're saying the second half of 2025, and we're pushing hard to see if it can be sooner than that because we want to take advantage of this fantastic gold price. But yeah, we're absolutely laying the groundwork for that to be a confident timeline.
Well, if the company is confident there's enough high-grade material on the ground, or in the ground rather, why not just put the company up for sale? Why go through the trouble of mining it, producing it yourself, putting in the CapEx? It's expensive. It's time-consuming.
Yeah, for sure. So I think there's two answers to that. One of them is that we're always going to operate in shareholders' best interest. So if someone came along and made us a really good offer and we thought that that was in shareholders' best interests, we would absolutely consider that. So that's one answer to the question. The other answer to the question is that the team, Shane Williams and Frank Juicer, they're about building a significant new Canadian gold mining company. And the Madsen mine is the first asset in that vision. And so at this point, unless, like I say, an offer comes along that is clearly what we should do for shareholders, at this point, the vision is actually growth from Madsen, adding additional assets and becoming a new player in the Canadian gold mining scene. So those two things are both very much in play.
What's the estimated run cost, fixed cost of operating this mine? Suppose it goes into production.
So I can't talk about that yet. We don't have a pre-feasibility study out yet, so I can't actually say that. You can look back at Pure Gold's numbers if you want. I think the comment that I like to make is by the time we restart this mine, we will have very little, if not perhaps no debt, which obviously really helps economics. And we don't expect the costs to be unusual for a high-grade underground gold mine in Red Lake. I will within that say, though, don't look at Evolution's costs down the road. They're having a lot of troubles, and we're not going to be producing gold at a $2,600 all-in sustaining cost. We're going to be producing it at a cost where we're confident we can make some good money.
Well, I think what investors may like to know is what the runway for West Red Lake is, because you are transitioning from an explorer to a producer, which is a big transition. You've got about $50 million in the bank right now. You told me offline. Is that going to be enough to make this transition, or do you need another round of fundraising?
We're going to need a little bit more money. So $50 million is absolutely going to get us through most of these capital projects that I just laid out. And the drilling that, like I say, is just ongoing. I mean, we have 100 people on site. We have a development crew and a drill rig underground 24 hours a day. Like we're sort of an operating mining company without actually operating the mine. So that is another way of looking at why we're so motivated to get this thing going again, because it costs a lot to do all the work that we're doing, and that's not a sustainable business plan if we were just to sit in the okay, let's keep getting it ready mode. We will need to access a bit more capital to have a comfortable position as we ramp up production. Nobody wants to be constrained for capital when they're ramping up production. That is a really dangerous thing to do with a new gold mine. You end up making decisions and doing things that kick you in the butt down the road. So we will access a bit more capital. We're very aware that the market probably wouldn't love us doing any more equity. We've accessed over $100 million in financings in the last year. So really phenomenal that investors out there can see the investment thesis, understand what we're doing and why we're doing, and sort of the potential for this company to be worth more should we get this mine successfully back into production. So we're looking at other options for accessing capital. We have warrants out there. Can we bring some of those warrants in? Can we, what are there small loads of debt that we can take on that would be easy, quick to repay? We're very aware of our shareholders and not wanting to give them any more dilution than we have. But we will need a little bit more capital.
Are you planning to, I guess, drill and mine everything yourself, Gwen? Or is the company looking into perhaps a joint venture with a senior or mid-tier?
I personally am going to go underground and mine it all.
Yeah, are you personally going to do it all by yourself,
Gwen? I'm moving a red
exactly what I meant. When can we see you and your shovel? Right, yeah. No,
at this point, we're certainly operating on we're doing this. I mean, we have a significant, and we're not using contractors. We are doing this on our own. We have a significant team of miners. We're hiring more miners.
Okay.
So we're doing it on our own right now.
Okay, great. So what's next in the timeline? 2025 is a year away. You mentioned you've still got a few steps and hurdles to overpass. What can we expect next?
So I think some of the key things that are going to happen over the rest of 2024 are this connection drift, attaching the two sides of the mine. It's going to make for a way more efficient ability to move mineralized material underground. That's really important de-risking factor. I know the market might not get so excited about that. I get excited about that one. A test mining program and a bulk sample. I think given the elephant in the room, which is the fact this mine failed, not even 2 years ago,
What do you mean failed, for those of us who haven't followed the news?
Right. So Pure Gold built this mine. They built it on too little money and with too little operating and mine building expertise. And because of those forces, they made some decisions that disabled the mine from turning a profit. Like it went bankrupt after 14 months of commercial production. And that is a whole other conversation. I'm happy to have that conversation. But that's very much the elephant in the room. If you want to look at it from that lens, the other lens is that's absolutely the opportunity. That's why we bought this asset. We bought it because the decisions that they made that didn't work out for them created problems that are fixable. And so those are the changes that we're implementing on the mine site right now. Like I say, the ore kind of got away from them. They didn't have a good enough hold precisely on where the mineralized material was underground. There were inefficiencies in how they moved the material. There were inefficiencies in lots of things. And they also, the way that they took on debt really increased their operating costs, like really increased them. So we're not going to do that. We're going to re-enter production with very little or perhaps no debt. We'll see. We're implementing all those fixes. So the test mining and bulk sample is going to be really important because we need to show the market. We need to help investors have confidence that we do know where the mineralized material is now, that we're going to mine it without a lot of dilution, and we're going to deliver to the mill mineralized material that is of the grade that we say it is underground. That's a really important part of the investment thesis.
Right. And well, the other elephant in the room that I have to address is the share price of WRLG Gold did very well the first half of the year and then took a nosedive as of basically April. What is the market discounting right now? And second part of the question, what is the company doing to address this?
Yeah, for sure. So I think my understanding, my take on the share price is that the market really didn't like the amount of financing that happened. We issued a gold linked note, and then we did a equity financing. Collectively, that was about $60 million that we raised in the springtime. And I think we as a team believe that maybe we didn't we didn't prepare the market sufficiently for the fact that we needed that much capital to get this thing ready for restart. And so because maybe we didn't do enough preparation of that, people ended up wondering, wait, is something going wrong? Like, are they trying to money over problems that they're uncovering at the mine? And that isn't actually the case at all. We're just making sure that we're doing all the projects that need to be done so that when we restart, we're confident that it's going to be a successful restart. So it was really a financing impact. Also, the financing that was more recent, just the equity raise, also had a tradable warrant, a listed warrant. And so that just listed 2 weeks ago. And so then you end up also getting some share price pressure as people. So if you want to call it that play, maybe they sell their equity position a bit to buy the warrant. So that's sort of maybe dragging out the impact of this equity pressure this financing pressure that came onto the stock. But just before this call, was running through I was making a list for our meeting tomorrow of all the things that we're going to do to make sure we're really trying to pivot the story out there. We don't want people to think that we bought an asset for a very good deal and it has lots of potential. We want people to know that we are going to be producing gold next year, and we have almost all the capital that we need to do that. And we have a huge number of capital projects underway. And this isn't an arm waving potential. This is a very real thing. So that's the story that we need to get out there and have people understand, because we turn this thing back on and we become, a single asset, high grade gold mine next year. Those companies are worth quite a bit more than what we're trading at.
Well, not a lot of juniors are, have even the ambition to make that transition. So congratulations on even making that plan and making the steps towards doing that. Before I let you go, let's talk about you before we go. You have been known in the industry as a resource maven for the last 10 years or so. You've made a name for yourself in the mining sector. Everyone knows you. And now you're on the corporate side. Tell us about that transition. This year is a year of transitions.
It is, absolutely, right? I really loved my time as Resource Maven. I wrote a subscriber-supported newsletter trying to help retail investors identify good opportunities in the metals and mining space. I loved it. I learned a huge amount. I loved helping people make money in this space. We had some really great wins. But I was looking for a change. Newsletter writing is a very solitary endeavor, and I was sort of ready to work with a team. And when I got to know Shane and his team, Shane is a really fantastic operator. He has built mines all over the world for a bunch of companies from, starting with the Lundins. He spent a bunch of time with Eldorado. He's built different kinds of mines. He's built them in different countries. He is a mine builder and operator, but he's also just a really good leader. He's a good communicator, and he's really thoughtful about who he brings into the team. And so as I got to know this group, I was like, well, if I want to be part of a team, I'm not sure there's one that I want to be part of more than that one. And then I also just love this investment thesis. I've looked at junior mining investment theses as my job for 10 years. And this idea that West Red Lake is at the starting point of the golden runway, right? That second part of the Lassonde curve where you go from spending money and you transition to making money, and the re-rate that can happen when stocks do that golden runway and get into production. It's like the most reliable re-rate in the mining space, in the junior mining space. And I'm just really excited about, being part of the team as we do that. So yeah, It was a great coincidence that they needed someone to talk the story and help people understand it.
Well, congratulations. I'm happy for you, as I'm sure your followers are. So let's keep tabs on the West Red Lake story. Where can we follow the company?
Well, westredlakegold.com is the website. You can find contact information for myself and others on the investor relations team there, or you can just email me at gpreston@WRLGold. So West Red Lake Gold, but just the first letters.com.
All right, we'll put the links down in the description and your email. You'll get a flood of emails after this interview, I'm sure. So get ready for that.
I'm ready.
Thank you, Gwen. We'll speak again soon.
Thanks so much.
Thank you for watching. Don't forget to like and subscribe.